All right, everybody. What can we say about today? Oh my goodness. Upper left-hand corner, September 10th, which is Friday, 2021. This is the S&P 500 futures that we're looking at a little bit after the close of the futures market. Now, the current contract has switched over, at least on the TOS platform, TD Ameritrade, from September to December. So we're looking at now the official continuous symbol is showing December contracts, not September anymore. Okay, I've been trading December contracts for quite a while, and I use this specific symbol MESZ21, which is the E-micro December contracts. Okay, let's get started. Oh my gosh, there's so much on this chart to talk about. Always try to keep this video short, but this is just like a huge time in the market right now. So upper right hand corner, the yellow circle furthest in the upper right hand corner, look at those candlesticks. 1, 2, 3, 4, 5, 6, 7, 8 last trading days. All of them red except for one. Today was a monster day, but we're going to talk about something very specific today. Okay? I want you to look to the left of that circle I just mentioned with the 8 red candlesticks, or the 7 red candlesticks and the little green one. Look to the left, back on like August 18th. You see how you got a couple really big red candlesticks in there? They're big, right? They're long. Look to the left of that one. There's another yellow circle. You got like 2 candlesticks, but particularly one in there, really long candlestick, right? You look to the left of that one. There's another one. Long candlestick. Long red candlestick. The one back on May 10th all the way to the left, upper left. Look at those. 3 huge red long candlesticks. Now let's go all the way back to the one on the upper right. Do you see any really long red candlesticks there? We don't see any yet, right? Just today was kind of hinting a little bit. But we don't see any red candlesticks in there with a long body. Now, if you didn't watch my video from yesterday, you really need to go watch it. So after you watch this one, look for the link in the description. Really important. I talked about how this pattern, this candlestick pattern we're looking at right now, is completely different than all the other pullbacks we see on the screen. Completely different nature, different characteristic to it, 100%. Looks totally different. Of course, you can see in big red letters just below that. Next week, big red candlesticks. That's right. Pause the video if you need to and ponder on that for a moment. I mean, serious profit has already been taken this week. For those who watch my YouTube channel, if you haven't watched the last 5-6 videos from the last 5 or 6 days, go back and watch it. I share my profit loss every day. Every day's been huge. And we haven't even gotten to the big candlesticks yet. So why do I assert there's going to be big candlesticks? Okay, let's look, staying with the circles on the far right, the yellow circles on the far right. Come down to the Stochastic Momentum Index. I got it circled, little circle there. Look at that blue line. It's already through the bottom line, right? It's already gone past the bottom line for the Stochastic Momentum Index. Right? Now, staying with that indicator on the Stochastic Momentum Index, look to the left till you get to the next yellow circle. You see how the Stochastic Momentum Index is just kind of touching the red line? It didn't go below it, right? Look at the one to the left of that one. See how it came down, just kind of touched the line? Okay, now come all the way back to the right. The ones in between there, the ones that are kind of like halfway down, I didn't even bother circling those because those are nowhere near the bottom line. So we have a situation right now where the Stochastic Momentum Index has broken through the lower line and has a negative number or a lower number than any other time in the last, well, I didn't go back more than 3 months. But if you go back, you got to go back quite a ways so you see Stochastic Momentum Index break below that line. Okay, so that's one indicator already as of the end of today that's broken through the line. Now, it could change. It could retract. So no, I'm sorry. At this point, it can't retract. It can come up. It can turn and come up. But today cannot retract. Throughout the day, indicators retract. They go down, they come back up, because throughout the day, they can move up and down, just like price. But once the day is closed, that indicator cannot retract from where it's at. It can only plot a new day. That new day could be lower, the same, or higher, but it can't go back and retract the day we're on. You follow me? That's important to get that concept. So this stochastic momentum index is lower than it's been for at least 3 months, probably longer. I didn't go back any further, but I might look at that over the weekend. So keep that in the back of your mind for a second. Let's move down to the Big Daddy forecast. What do you see there? Same thing. Very similar. It's lower than the 2 yellow lines to the left of it. 2 yellow circles to the left of it. Even though it might be hard to determine the numbers, I already checked the numbers. I just didn't put them on the screen here. But the Big Daddy forecast, as of end of today, the number is lower than any other time in the last 3 months. It's a daily chart. Okay? Keep that in the back of your mind. Come down to the VIX. Back on Wednesday, the VIX was 17.96. Thursday, it's 18.8. It almost jumped a full point between Wednesday and Thursday. Those are big jumps, guys. We're not tiny little sideways jumps. These are big jumps when you see a full point moving in the VIX. That means volatility is seriously moving. In this case, we're going from less volatility to greater volatility, right? We're becoming more volatile. And remember, the greater the volatility, the more the price will decline. The less the volatility, the more the prices go up. Now look at today. The VIX today, 20.95. So now between Thursday and today, which is Friday, as I'm doing this video, the VIX jumped more than a point, 1.15. So from Wednesday to Thursday, it jumped almost a full point less, like, the difference between those two would be 16. So not quite a full point, right? So about 0.84 if my math is right. Okay. But between Thursday and Friday, it jumped even more. So volatility is increasing, is expanding. It's taken off. Now, even though I didn't circle on this, you know what? I will circle it. Before I put the video out, I'll circle this. Staying with the VIX now, guys. Stay with me on this. To the left, there's a big spike right around like August 20th, kind of. There's a big spike there. And there's another big spike back on like July 19th. And then there's another relatively big spike right around June 15th, 18th. And then another big one back there on about May 15, 18, whatever. Okay. Some of those spikes, if you didn't watch my video yesterday and talked about why this next week coming up is a huge week, you need to go watch it. Okay? And some of those spikes we're seeing in the VIX are associated with why we have these certain huge spikes that go on in volatility during certain times of year. Okay? And next week is one of them. Huge. Or as I can say, ooge. It's ooge. Next week's going to be ooge, guys. Absolutely ooge. Okay. So we're seeing numbers now on the daily chart that are larger in a negative way, so more negative, if you will, than any other time in 3 months at least, probably longer. Okay? And yes, at the very bottom, the Dow Jones Transportation continues its divergence. Still going down on the average. Hasn't come up anywhere near May 10th, way back there on May 10th. S&P 500? As of whatever, 1, 2, 3, 4, 5 days ago. Wait, 1, 2, 3, 4. Yeah, 5 days ago was the all-time high. Up to that point, it was just kept going up. Dow Jones, down. Dow Jones Transportation now, not the industrial, the DJT. If you don't know about the Dow theory, go look it up. Yes, we're in a huge divergence. Huge. Biggest one ever. Now, I'm going to come full circle on this. Full circle. Talked about the indicators and how they're especially the stochastic momentum index and the VIX, the Forex, the Big Daddy forecast are really low. You know why? Going back up to the upper right-hand corner now, all the way to the upper right-hand corner, that big circle with all those red candlesticks. And I talked about how we don't have any big red candlesticks in there. Why not? Because they haven't happened yet. Light bulb moment. The big red long candlesticks are still to come. Can I say it any louder? Shouting in people's ear. The big red candlesticks are still to come, folks. That's right. If you think there was profit taken this entire week, which there was, as in ooge. And by the way, I'm not opposed to taking long positions. I don't do bull-bear nonsense. Bull, I'm a bear. No, I'm a man. And I trade the market. Okay? Long, short makes no difference. The most profitable time in the marketplace for the stock market now, for the S&P 500 to be specific, but it probably applies to the other indexes, the big ones, is down into a cycle low and coming out of the cycle low. That's when you're going to see the biggest price movements and the most profits over the shortest amount of time. It doesn't mean you can't make profit in the watch the paint dry as the market creeps up day by day. You can make profit doing that too, absolutely. Hot and heavy trading, guys. Oh my gosh. Look at that candlestick. Just for a second, look at the kind of the upper middle part of the screen. Look at that last candlestick. It's starting to get long. Look at that candlestick. Oh, dang. A lot of heavy action today. Downward pressure. I mean, there was a lot of downward pressure today. That candlestick is speaking huge. Okay, look at the middle of the screen there. You see I got 3 words, lock in profits, and I circled around my trailing stop. If you look to the far right, you see I got 3 contracts going on. I'm up $751 for the day. My profit loss on the position is $75. I've only got 3 contracts. I'm kind of keeping it small. Yes, I was tempted several times to go huge. And if I had gone huge, I would have made buku. Thousands. Like in thousands and thousands of dollars could have been made today. But, like I said, I'm not going to kick myself. When there's a reason why I kept it small at this point during the day. I'll get into that in another video. So back to the middle of the screen. Lock in profits. For those that don't know about trailing stops, go look it up. For those that you've been hanging around for a while watching the video, you should know about trailing stops by now. And here it is. Here's me using locking in the profits. So what's the big deal? Why do we want to lock in profits? And what does it mean to it's really important to get the profits on the books. What am I talking about? In the old days, we kept ledgers before computers were around. They were basically big business books. They had kind of like a spreadsheet, but they were on paper. And accountants and people would keep track of stuff, not just in trading, but everyday business, everyday life, sales, purchase orders, you name it. Everything was done on ledgers, guys. There was debits and credits all on a ledger. That's an old saying from days gone by. Book the profits. Why is it important to take your profits and get them onto your account, to lock them in and get them onto the account? Instead of just leaving your positions out there hoping it'll be more profitable, hoping for more profit, hoping more for profit, and people never close their positions until they're actually running at a loss. Then they panic and close them. Oh, I didn't make any money today. Okay, I get it. Been there. Not criticizing people, just saying, I totally get it. Stop thinking like that. Get that junk out of your mind. Lock in the profits. As soon as your positions move profitable, trailing stop, put it in. And why do we want to get those profits booked and put into the account? And not just leaving all the profits on the table hung up in positions? Because your account will benefit from it in a big way. If you got margin debit, it'll decrease the margin debt. If you've already got positive cash, it bolsters your cash even more. Which means your next trade, which could happen just 1 minute later, you've got more leverage. Is everybody following me now? Did you just hear what I said? If you're not sure, pause, rewind a little bit, listen to it again. Or for those I'll just repeat it again. The reason you want to book those profits is because it increases your leverage. So on your next trade, you have even more leverage. You might be able to take an extra contract. Maybe, maybe not. But at least you're working towards an extra contract. You follow me? Book the profits. I'm not saying you should take a bunch of really quick small trades with only $5 profits. Now that's just being silly. You gotta let your profits let the position and the pricing give it some room to breathe. Let it have some legs, as they say. Let it run a little. But the trailing stop will let it run. How much you trail is up to you. Get those profits booked. Get them into your account. Lock in the profits. When the market moves back against you or works against your favor, the trailing stop kicks in and books your profits, baby. Your account gets bigger, and the next trade you make, you've got more room, you got more leverage. So there's a couple ways you can benefit from that. You can take an extra contract or keep the same amount of contracts, but you don't need quite as much price movement. Okay, there's a lot of ways that you can benefit and be more profitable as your account gets bigger. You don't need as much price movement to be profitable. Everybody follow me? These guys and gals, retail traders, hedge funds, whatever, they have a lot of money. They don't need a huge price movement in the market. Now, there's a limit to how far you can go if you have a lot of money, but there's a limit, right? The market does have a limit. But in any case, for us small retail traders, you're nowhere near that limit yet, trust me. The bigger your account, the more contracts you can take, a smaller portion of the account, right? As you take a position, it's less and less a percentage of your account, so there's less leverage being used. Or if you want to go kind of medium or big, you can. There's a lot of ways that you benefit by booking the profits. Okay? Book the profits, guys and gals. Expect big red candlesticks next week. Expect to profit. Expect to profit next week, guys. I think we're going to have a really significant price decline. I think this fall, winter, we're going to have huge price decline. Is this the start of some continuous huge price decline? I don't know. Maybe. But it doesn't matter. We're going to continue to utilize what we know to forecast and predict the market to the best of our abilities. We're going to wait for confirmation. If you don't know what that is, start looking at my videos for the last week or 2 or 3, because I talk about it all the time. So we predict, we forecast, we wait for confirmation to see if it's accurate, and then we make the trades. And then we lock in the profits. If the market doesn't work in your favor, put your stop losses in there until the market's in your favor. If it's not, I like to make those stop losses kind of on the tight side. Don't let your positions run wild and hope and just, it's all going to come back. No, don't do that nonsense. That's not trading. That's insanity. Subscribe to the YouTube channel, guys and gals. I really appreciate it. Give me a thumbs up. We'll talk to you all real soon again next time.